Hello ladies and gentlemen, and welcome back to our special weekend edition of the markets around the world. What a week we have for you. It is the big earnings. Apple, Google, Microsoft, and many more all coming out with their reports this week. And often it can be a turning point for markets. Whether it goes down or it goes up, this can be that pivotal week where decisions are made. So depending on the close, depending on where the markets are at, is going to be very important. For many weeks now, we've had a defended zone. We've used this effectively on the channel to find buying technical analysis setups in terms of critical structure. For now, we've filled the gap. This was a super important point that we've been looking for. That happened on the Friday trade. And now the markets seem to be moving back a little bit, but will they instantly reverse into some earnings? Well, 4,200 kind of holds the key, and we'll discuss that in today's video, plus many more things. A lot of people think it's a bull trap, and potentially rightfully so. This is going to be a great video. See you soon. Well, welcome back everybody to the Daily Show, where we talk about stocks, commodities, and cryptos. If you like any of those markets, firstly stick around, but also give us a subscribe, and of course smash that like button if you enjoy this type of content. Let's begin by talking about smart money flow. We've been discussing this for a few weeks. Basically, we saw insiders purchasing back in at a faster rate, and we saw what is called the smart money flow index showing us a little bit of extra kind of, I guess you would say, juice being piled into this market since the middle of June. Now, the markets have reacted to this. They've moved up a little bit bullishly. You'll notice, though, that not necessarily is smart money always correct. It's just a good little beginning idea that possibly we've started to drop. Notice in the last couple of weeks, they've actually kind of really stopped purchasing anymore, even though the market's been going up. It's when that now downturns and downticks that we need to be concerned, and that could happen this week. Let's also discuss what also has been going on under the hood in the markets. And we've got two lines here. One is basically asset managers, and the other one is leveraged money. They're diverging. Effectively, they're moving apart. And what we're seeing here is we're seeing a big movement of money managers coming back into the market, while the leveraged guys are saying, no, I still want to short this market. Two differing opinions, a confused market in some ways. Now, this is going to be important because everybody was too bearish. That's the problem. Everyone was. We polled the community here on YouTube. We found that a week and a half ago, 70% of you were bearish. We also found that all the asset managers were bearish, and everyone was placing bearish bets. Some of those have started to expire. Remember, when people place large bearish bets, it often shows up in the options, and we do look at options on this channel. Notice here the bearish bets that have been placed by the asset managers overall have been increasing throughout 2022. But there are times where little traps have occurred. If you notice these dates, in the March into April, and of course that May into June, we saw a bit of a pickup in purchasing from the bigger players. We're starting to see that happening again, but not necessarily in an incredible level yet. So maybe there's a little bit more run in this bull move in the markets before the bears get control, if it is to be a bear trap. Another reason why that could be happening is because of the thing we discussed on the last previous video, go check it out, where we discussed the VIX. And of course, we saw interest on the 40 plus VIX. Now, for anyone that doesn't know, the volatility index, or the VIX, basically shows us how many people are scared in the market and how much fear is in the market. They call it the fear index. People are placing a lot of trust in fear increasing into the end of the year. But this could be like a fall that's like different. It could be slowly going down. If it does end up going down, it may just drop off, but the VIX may not go up. And there's all sorts of things. So VIX plus 40 is another sign that maybe there's a little bit more of a run to go before the markets turn. A lot of other people also look at copper. We do here on the channel. They've been sending this one around. I've seen this a few times. And basically what it shows us is that copper fell off a cliff. Now, we all know that what we've got going on at the moment is demand destruction. Effectively, the Federal Reserve has really raised rates at a fast rate. That's hurting what we call the demand. But interestingly enough, copper tends to have a very strong seasonal with it at this time of year. So will it actually go into the normal seasonality of weakness? Well, people are saying copper is potentially bottoming. Other people are saying, well, there's a lot worse to come. Again, people placing those bear bets, starting to get confused, and we need to cut through that by looking at the charts, which we will be doing later. In terms of dry powder and cash that's available to companies out there, companies are in pretty good order. I mean, you can see here that the ability to make purchases by a lot of companies is still incredibly high. They've got a lot of free capital potentially allowed to go through. That is a potential positive sign for markets. And another sign that's interesting is the Federal Reserve and any other central bank around the world. Remember, whatever central banks are doing tends to be wrong. Here's a great chart of what the Reserve Bank of Australia thought was going to happen, of course, with inflation for many years. They always thought inflation was going to get out of control and go up, and then now they're critically basically not thinking about it enough in terms of how these inflation numbers are looking. So don't necessarily trust what the central banks are doing. Instead, look to what the market's telling you so you can make sense of things. Because remember, Papa Powell said inflation was transitory. That doesn't seem to be happening so far. What other things are going on with earnings? Well, of course, it's all about beat data. So far, I would say it's a lackluster earnings report. However, the expectations were not very high. Usually we see this number, the beats rate, being around 70% plus. We generally notice that then starts to drop off near the end. But what we like to see is at least meeting expectations or slightly beating them. The market loves that. And at the moment, it's pretty optimistic leading into earnings. And the reason why? Well, it's all these big names. Take a look at this. Alphabet, Coke, Visa, Microsoft, Shopify, Meta, Apple, Amazon. I mean, it's just so many big names. And really from Tuesday, especially after the close, all the way through to Thursday, I think we'll get a good idea of whether the market wants to go bullish or not. And you know, the worst thing, it's not just earnings this week. There's also a bunch of other news coming out, including statements and other reports. So it's going to be incredibly volatile from the perspective of a scalper or day trader. You're going to have to be very nimble and fast. So before we get into the charts, let's talk about what actually has been going on so far in the markets. We've got here the one-day performance of the Friday close. Notice that anything really, especially to do with ads or advertising, social media, those types of things, sold off aggressively. Google and Meta both down 5+% for the session. It's not very good. I mean, when you have those types of markets where basically you're seeing ad spending going down and obviously really companies starting to pull in, it shows you that they're scared about what's happening in the future. We've seen a lot of layoffs in Silicon Valley. We've seen the beginnings of basically a degrading labor market, and that's going to continue to push through as the Federal Reserve raises rates. And do remember, we don't think they're going to stop raising rates until 2023 at the earliest. How did the market react to some of these things to do with things like Snap and other social media companies not doing so well? Well, it sold off and basically couldn't hold. It had that initial little rally pushing the S&P 500 just into that gap fill or very, very close to it. And then the rest of the day, the market basically sold off. Now, a lot of this would have been profit taking. If we think about it, basically all week last week was a massive run. We saw so many great gains, semiconductors, technology, anything that was growth was doing well. Friday, things changed. The market moved into utilities, staples, healthcare, defensive assets. This we haven't seen in quite a few weeks now. We've seen mostly markets moving into just growth, and you'll see it by this chart. The last 5 days of trade, the best performing XLY, consumer discretionary, semiconductors, clean energy, really just the high growth kind of ones. If we continue to see the market rotate into utilities, staples, and other sectors, we need to watch out. So make sure you subscribe to the channel because we will be checking this. We will be following it. And if that continues to happen for 2 or 3 days and we get stagnant price, we have to watch out because that is a good sign that if the market breaks to the downside, it could be bedlam and maybe that was a big bull trap. Let's now get into the charts. We'll start here with the VIX, and we know that the VIX is above 20 still. And for anyone that doesn't know, whenever the fear index is above 20, basically we have to be concerned about the bear. At this stage, we moved through the 24 level last week, and each other time that's happened throughout 2022, it's led on to a further bull recovery, a further dropping of the VIX, and then it spiked somewhere around 19 to 20, and that's been where we saw those previous kind of flash crash events. So from this perspective, you would think the bulls are still potentially in control of this market, and they certainly are in the shorter time frames on the charts. Something else happened that was weird on the Friday trade. We saw yields drop considerably, and I'll just read some numbers off here. Basically, the December yield expectation for the Federal Reserve went from a 3.4+% to a 3.3. We then saw April 2023 go down to 3.27. So what the market is basically showing, if we could just draw it up here, is that the rates are going to go up. They're going to hit around 3.4% now instead of 3.6, and then they're going to drop substantially and faster than the market was expecting. A lot of this, I think, has got to do with degradation of the economy. That ad spend and the social media presence in terms of just seeing the general population potentially start to pull back, it's got Wall Street worried a little bit about future earnings, downgrading some of those. And it's like that vicious cycle. But at the same time, it's saying the Federal Reserve will have to therefore drop the rates. They're betting inflation is curbed. Do we know that? We don't really yet. We have no idea that those numbers are coming out. Another good sign for the bulls at the moment is the DXY. We saw a new low forming on the US dollar. That's great because, of course, if it goes underneath this zone here, that's fantastic. It kind of looks like it's been in a little bit of distribution. This area here, basically just having a nice kind of trap zone for buyers, and then it breaks down below. And when that kind of thing happens here, we usually see some follow through. Now, the great thing that's going on in the dollar index is if money's coming out of cash, where's it going? Well, it's most likely going into bonds, and it's most likely going into the stock markets around the world. We're seeing a little bit of that occurring in these markets. So dollar index will be one to watch. If the dollar index continues to make a new low, let's say it gets underneath 106.10 or 106.15, then it probably starts to fall through even more. That distribution is therefore confirmed, and the market will go, of course, higher. Now, if this dollar index breaks to a new high and gets through these previous little 3 weeks, watch out, because at that point, you're probably seeing the stock market really failing. This would have just been a false break to the downside, maximum pain, and then the market will move up. Two very critical points to be watching, and of course, it's a great synergy with your stock market trades. What else have we seen happening? Gold has bounced off the low. I'm still not seeing the money flow I'd like to see. I think this week will be the week that we find out whether gold really wants to go up, but fantastic buys. I saw a few people in our Discord community, links in the description if you're interested in joining our 10,000 plus public Discord or private Discord, links down there as well if you want a 7-day free trial. And basically here we have a very nice level of demand or support. This high 1600s zone. We saw the buyers for gold come back in, and they actually pushed the market up quite a lot. And this was good because we got through some of the previous wicks. You'll notice there's some wicks over here sitting around 1720, and the market was falling off and then instantly bounced into the zone and found buyers. Now, I do expect some weakness in gold still for pullbacks, but this is a fantastic first sign on the charts, not necessarily the money flow, but on the charts for traders. If we go down to something like a 1 hour chart, you can see that initial, really exceptional, huge kind of buying coming back. The market may come down to something like a 1713, but it looks like there's going to be some buying demand here on gold for now. Early days, we'll continue to follow it, but great sign that it got through that previous level. And of course, if it ever does get through our second box, which sits at around 1750, I do feel like the buyers are fully committed back into gold, and you'll be looking at pullbacks in the buy side from a technical zone or technical level. Oil, on the other hand, keeps showing destruction. We were weakness on oil last week. We saw those series of lower highs that we discussed, and that was pretty good. I mean, basically it just sold off around touching this zone here. It sold off, smaller time frames changed, and now we're back at the level of demand. This level 95, I don't know if I'd trust it. If you were trying to buy this level, you'd probably more likely want to wait for it to get through this area up here, create the double bottom, and then get into the pullbacks. If you're trying to buy this, I think you're pretty brave. And the main reason why is that it just keeps making those lower highs. Look at it on the charts. Everything changed at this point. So basically we saw the turnaround happen right here. Every single pullback, or the pullback, was met by sell demand. It then tried to rally, effectively distributed, and at this stage, at the time of recording leading into next week, we've made almost a new low. If we make a new low, pullbacks should be met by sell demand. So this is the time that you may not want to look at 95 from a technical buy zone. Most of the technicals are going towards the short side, so very interesting stuff. Tesla had an amazing rally. It was fantastic to see it go through. We're not quite through the little gap that's been left here over on the 6th of May, but really nice breakout. Even if we get pullbacks early this week, it's going to be hard pressed to say the market is in a downturn because pullbacks could be met by buying control. Why? Previous resistances on things like Tesla are going to be acting as buy levels for a lot of technical traders. People that missed out on this rally so far will be struggling. But Tesla's been a great proxy trade. If you felt bullish about the market, Tesla is in general giving you a better percentage so far. It's done a lot better than Apple, as you'll notice here. Big trend line going back through multiple years. Apple has really held that line for quite some time, and it's done incredibly well. I mean, if you think about it, all of these trend lines have been reached and then breached and then respected. So where's Apple ahead of earnings? It's right there. We might even see chop coming in where it's going up and down, up and down, up and down into the earnings. But what a big level here for Apple. And that's around that 154 to 156 that's going to be a very critical resistance for it to break. Other markets are struggling as well. We go to the European market. We love looking at the DAX here on the channel. Shout out to the Europeans and people around there. This market's very important for us to watch. It shows us kind of money flow coming in and out. Remember, the euro is quite weak right now. So if we're seeing money piling back into Europe, then it shows that the market is convinced, or at least it feels positive about the rallies. Rejection, rejection, rejection. I don't know what it is about this 13,400, but boy, oh boy, do traders want to sell at that level. If we breach and close above though, if we get above this zone, it could be a great go signal to show that the markets around the world are really prepared to continue to buy up this current rally that we've seen. Had a nice double bottom off the base. That's now completed into this level. Great to see the technical play out there. But if we get through this zone and get a nice closure above these wicks, I really feel like we could be back to moving that gap, which is on the DAX here, and possibly even a lot more on these markets. So yeah, important area. I'll be watching the DAX on my charts this week. 13,400 will continue to follow this one through. IWM, the Russell 2000, for anyone that doesn't follow it, the smaller cap stocks, basically it breached through a downward trend line. And this is pretty important because basically with downward trend lines, when we see them break, it means that the change of trend is potentially occurring. We've got a small pullback here on IWM. It then met with a little bit of buy rally into the close of the day. And of course, we get a new high here. What's the next level that's logical? 190 for IWM. So again, some bull cases can be made here. The Russell is often kind of leading the way because of the small caps. And we're on a nice technical support at this stage leading into the Monday, Tuesday next week. Nasdaq has done incredibly well as well. Goes into the 12,600. We do have a longer term trend line that goes through the previous levels. It's not near there yet. It's about 13,100 where that comes through. And yeah, basically we want to clear, you would have to say that trend line. So anything upwards of 13,000 is very possible here on this bull run. With the Nasdaq, I've been less following the Nasdaq and more following the S&P 500. If it's breaking out or it's showing the right technical, then the Nasdaq has been more of a proxy trade. That is, it doesn't give you necessarily the best entry because it's very, very manipulated at the moment, but it does give you the best percentages, and we've certainly been following it along. Really nice movement here in the previous week. If you traded the Nasdaq, you did well. But you will notice since that ad revenue came out for Snap, it's just been a little bit weaker. And that's because people are starting to get concerned about these stocks and their scalability. Notice where it closed. It came up and it got close to that 12,340 zone or 35 zone. This area here is going to be important. If the market breaks under there and it gets underneath, the next stop for it really is these previous resistance highs. So I think a weakness here could come back into the markets, and a lot of people are going to be concerned about that. So that's about that 12,150. Anything down to there is still technically, very potential buying areas, but smaller timeframes would change, and we would expect something like this to happen. Down, up, down into the zone, potential buyers come back in. We'll find out whether that does occur. Let's now have a look at the S&P 500, the most important market to be watching in the world at the moment. It did fill the gap, or at least got pretty damn close to it. Here's the gap. Here's that kind of fill high. It hit a 4,000 plus, which is a super important level. And now we're faced with a dilemma. If the market comes back down to these levels, okay, we're probably going to see buyers try to show commitment to it. If the market then hits something like a 41.80 or 41.60, do we see sellers come back in? Well, the real story is probably to go back through the previous history of the market in 2022. Now, we've seen it a few times. When it's rallied, especially here in March into April, we rallied at a rate faster than anyone could believe. Notice also this bullish hammer coming off the defended zone and weekly bullish close. It points towards bulls still being here in this market overall. We then made a new high, took out everyone's stop losses, took out a lot of people's commitment, and shorted off this market. Will this happen the same time? If we block it up, which I will do in an early video next week, so make sure you subscribe for that, this area here, this 41.60, 41.80 zone, it's just such an important area. And I think that we could breach it and still be in a trap. So we'll have to be watching very closely the smaller timeframes. And the way that we do that is obviously looking at the US 500 futures. Whether you trade the code ES, US 500, we get asked a lot of questions about this. Most of them should show you the key levels. But the big one that we've got set up here for the bulls and the bears this week has to be here, 39.20. 39.20 was a great level in the previous sessions. We saw it buy up a few times. Now, the reason we say this is because this market keeps making basically a series of higher highs and higher lows. You can see it here, higher highs and higher lows. On the small time frames that change trend, we could still see a rally and then I think come down potentially even to this level. Maybe we put the tester on the 39.20. If earnings are good or earnings are at least subpar, we get that market kind of moving towards the bull side again. 39.20, very important. Obviously a 4,000 plus handle close on the daily, probably leading into a 41.60 rally. Make sure to watch the channel. We'll be covering this as we get more information. But at this stage, we've got a very nice level at 39.20, and we'll have to find out whether that can hold up. What are some other things that we've been finding? Well, we've found a lot of stuff to do with options over the last couple of weeks. Maximum pain. The market's been pretty good at getting close to maximum pain during the third week of each month. That's the biggest options expiration. And right now we have it set for the 25th of July, basically at 392. Current market is at 394. Now, what did we just say? 392 is a pretty important level. Interesting that max pain is sitting right on it. So that's the Monday expiration. We'll go through the rest of the week once we find out how the positions are going into the big earnings. Let's move over to Bitcoin. Bitcoin had a bit of a sell-off through the weekend so far, and then it's recovered somewhat. I'm not really putting too much guidance on Bitcoin, but it's nice to see it recover. That could be showing us that the weekend futures and possibly even the Monday open might open a little bit bullish on the stock market. Reason why? Well, if Bitcoin is showing us risk on, risk off, as long as it's kind of holding or stabilizing, it's probably meaning people aren't freaking out about news around the world. So Bitcoin back to 22,500. If we look at it on a daily, you can see bouncing off that previous resistance. So we'd like to find the buyers here in Bitcoin and Ethereum pretty much right now. If it doesn't happen now, well, maybe it doesn't happen. I suspected for a while that we might be able to get up to like a 26 or even 27,000. That's still the aim here now that it broke past 23. And if that's going to happen, of course, the stock market should be a lot higher. All right, well, let's have a look at the news ahead for the week. And of course, we've got quite a lot of news. We've got consumer confidence coming out 10 a.m. New York time, Tuesday, July 26th. Then we scroll through FOMC statement, funds rate, and conference. Just wow, it doesn't get bigger than that, does it? So we've got interest rates coming out. We'll find out how much the Fed wants to actually raise these rates. Many people think 100 basis points. We'll find out. Expectation at the moment is for a 75 basis point hike. Well, that's what the expectation is. Obviously, a shock number on that could really push the markets. And these have been these pivotal weeks. We not only have massive earnings, but we've also got the Fed, core PCE, and a whole bunch of other news. So watch out this week, guys. It's a great week to be following the channel. If you are interested in following, remember to subscribe. We're almost at 100K. Thanks to each and every one of you. Give it a like. And again, if you want to join our communities, links in the description down below. See you soon. Have a great weekend. And this will be a big week. Bye.